Hi everyone, welcome to the ET Soonicorns Summit. My name is Pranav Balakrishnan, and today we are going to talk about how startup funding in India is being reimagined with global economic headwinds. I have with me Sanjay Nath, managing partner at Blume Ventures. Blume focuses on seed to pre-Series A stages of funding and has made over 100 investments across its 10-year history. Sanjay has invested in and advised a wide portfolio of startups, including Grey Orange Robotics, DataWeave, Locus, Tricog, LBB, among others. Welcome to the program, Sanjay.
Thank you, Pranav, and thank you, ET.
I'd like to dive in straight away. So, Sanjay, you started Blume Ventures over 12 years ago with a mission to reimagine startup financing in India. Talk to us about your mission and core philosophy and how that's evolved with the maturing of the Indian startup ecosystem and the quality of entrepreneurs we are seeing from here.
Sure, Pranav. So, I'll go back to about 11 years when Karthik Reddy and I started Blume in 2011. And you asked about, how the ecosystem has evolved. It's seen a sea change in the sense that, I spent some time in the Valley and Karthik was in the East Coast in New York, and then we both moved back, met through the Mumbai Angels. And when we started here, very often, the Valley VCs and other observers would ask, why should you care about India, right? Why should we care about India? You see a lot of startups, potential unicorns and soonicorns right in our backyard. As Mike Moritz at Sequoia famously said, I can ride a bicycle to them 30 minutes away. So, why should we venture that far? And if you look at the sea change today, we're talking about more than 100 unicorns and counting. Our philosophy was to catch them young, to basically, back them in a very, when this ecosystem was very nascent, because we thought, and of course we had this wishful thinking that India will break out and innovation can and will happen from everywhere. So our, that original thought, which is, comes back to the conviction capital, is that we would have conviction in these young startups that are two kinds of startups, right? That are trying to change the world, build technology platforms and products for the world from India, and then of course build it in India for India, on core impact areas like fintech and healthcare and edtech and agri-tech. So that philosophy has remained the same. I think what has changed is the scale, and the exits that have happened in the last decade have just been a sea change. So the 100 unicorns is just a metric, but the fact that it's happened and that it's real is a substantial, significant data point in the startup ecosystem's evolution.
With the slowdown in the funding environment, backdrop of global headwinds of high inflation, geopolitical risks, rising commodity prices, and the general public market volatility, how has your investment strategy changed?
Sure. So it's a great question. A couple of shifts, a couple of market shifts are happening. What's clearly happened, there's no doubt, is that there has been I won't use the word bloodbath, but there's definitely been a not positive sentiment and effects in the public markets, right? Where stocks have been battered. Even if you look at our own bellwethers like a Freshworks, for example, which I think is the stellar example of Indian SaaS company that's put India SaaS on the map. Post IPO, that stock has also fallen. If you look at also Zomato and the others in India, right? These are all bellwethers. These are our shining stars, have all fallen. So what's happened because of that is that it's actually pushed it's pushed more capital towards early stage. It's pushed it more downstream, right? You have earlier public markets and late stage investors that are realizing that if you're in this for the long game, and if because these funds, as you know, Pranav, are 10+2 typically, right? Some of them are even perpetuity funds where they don't have return capital in a decade. They can hold it longer. The real way to hold value is actually to come earlier and earlier, where you can get a meaningful ownership stake. You can really add value, and this is going to be a blip, right? The markets are going to come back. So actually, what it's changed is this pushed more late stage capital early versus shying away from it. The second trend we are also seeing is that, and this is not necessarily a political statement, but we are also seeing very favorable winds still from China towards India. So just to give you an example, about 5-10 years ago, when Karthik and I and the team, senior investment team, we would actually go to some of these conferences. We would sometimes get lip service, right? Because India had not produced the scale and size of exits that we're seeing today. You had just a handful, you could count them on two hands 10 years ago, right? You had Make My Trip, Just Dial, Paytm. And today you have unicorns. I'm using that word unicorns, even though it is just one metric, but you have them in cohorts, right? You could have a fintech unicorn cohort, you could have a tech unicorn cohort, and we also have that. Today, the scale and size of exits, data points are showing that India has come onto the map. So we're seeing a rebalancing from China in favor of India, which is a very positive shift, because early people say, okay, for us, Asia means China, right? They will not really look at India. So I think those two shifts of capital coming towards downstream towards the early stage, and also a locational shift towards India venture is, both bodes well for us.
Sanjay, we know that 2021 was a record year for startup funding. And while startup funding in the first half of 2022 was at par with previous years, recent data indicates that we're seeing a decline in funding. We see funding dip 37% in the second quarter of this financial year. Mm-hmm. And we continue to see, but the new unicorns being added. 44 was added last year, and now we have 20. Yesterday, we got another new unicorn. So in Shiprocket. So what is your outlook for the growth of Indian startup ecosystem and the birth of new unicorns going forward? What, according to you, are some of the key tailwinds that will power the next leg of growth?
Yeah. First of all, congrats to Shiprocket. It's not one of our portfolio companies, but we know Sahil before he started. So it's fantastic to see this. I think at one point last year in 2022, it was like a unicorn a week or two unicorns a week in one sense. See, I'll also caveat this by saying unicorn, as we all know, is only one measure, right? It is basically a privately valued company of more than $1 billion for the layperson. And I think it is one metric, but we also shouldn't get carried away, because the real success is continued and growing customer love on the enterprise side or on the user side if you're a B2C company. So yes, it's great to be unicorn, but eventually, of course, other metrics, right? Like profitability and sustained growth, right? So I just want to caveat that. Now, you asked about tailwinds. I'll break this up into the two Indias as we see them, right? There is what we call built-in, let's call it Bangalore, Gurgaon for the world, Pranav. And then there is the built-in India for India, right? So I'll start with the enterprise SaaS side, which is like my bucket, which is why I'm, spending a little more time outside India in global markets like the US. There, I think where the penny dropped and the sort of irreversible customer shift is that lots of enterprise buyers and especially SMBs are interacting exactly like you and I are, where they're basically making buying decisions on Zoom, right? So essentially earlier, whether you were selling your CRM software or an AI platform, you literally had to get on a plane even for a pre-sales call. And today, after the pandemic, the tailwind is that the enterprise buyer is actually saying that, I can be wherever I am. This is a SaaS tool. I don't need to meet every sort of head of sales or CEO. Yes, for that large contract, if I'm going to award a $500,000 contract, or that average customer value becomes larger, then sure, I can, then both of us fly to San Francisco, New York, or London to meet. So that essentially changed the cost structure, and we've seen SaaS just taken off. It's not just, I don't call it just cost arbitrage, but I would say talent arbitrage, right? I think our biggest strength in India is talent. I would say our talent to cost ratio is the highest in the world, right? For that same cost, the superlative talent, and the Infosys and the Wipro and the TCSs before us proved that on the services side, and we're seeing that emerge now on the product innovation side. So that's on the B2B. That is a tremendous tailwind. The other tailwind also is that you have a lot of unicorns also on the SaaS side today. Earlier, they were always usually more on consumer, as you would know, right? Today, you have our own Grey Orange is also sitting there. You have Freshworks, iCertis, Innovator, many. Now, on the consumer side, I think what has changed is, I think I'll take EdTech as an example, our own Unacademy or now our Class Plus. I think in 2020, just before the pandemic started, I remember Unacademy was valued something like 100 million. And what happened that year was again those levers of causing the sea changes. Geo payments got built. Suddenly you had mobile access almost dropped to zero. You had a move to virtualization where students and teachers could be on Zoom, right? Which also has some issues because I don't think young kids can really learn fully online, right? You have to bring them back into the classroom. So what happened is that virtual learning took off, and suddenly people said you had a lot of, in one sense, school teachers who were not fully employed, who were not being employed, like let's say housewives in parts of India, suddenly said, "Listen, I was a teacher. I can come back to teaching, and I can become a superstar educator on a platform like Unacademy." So once that took off, again, that was kind of like an irreversible tailwind, right? To give two examples, one on the SaaS side and one on EdTech. This, I think, is here to stay, but the move will be more of hybrid on the sales side, where you can sell initially on Zoom and then go in person to close the deal. And on EdTech also, I think, again, we need to bring children back into the classrooms, but there will be significant components and parts of learning online that will always remain online. So I think those two will only continue, and they can be applied to other verticals also, like healthcare, for example. We're seeing video consultations, right? Just as one example, and then you only go to the doctor for something really critical. So those examples of hybrid online, offline, where technology platforms can be leveraged is, to me, like an irreversible tailwind.
And coming back, Sanjay, to the investment strategy that you were talking about earlier, has there been any new rules that's been set lately, post these macroeconomic headwinds, like in terms of valuation, in terms of providing funds to startups? Like, has there been any new rules that have been set so that going forward, the valuations and the metrics that were there before this funding winter cannot be applied now, right? So what is your view there? What are you seeing there, Sanjay?
That's interesting. In the US, you have summer, and we're sitting in the summer, but the question is that every VC is sending out its winter is your memo, right? And that's not surprising. But I think it's fair to say that the shoe has shifted a bit, where the shoe is tilted more towards the investor versus the founder, and that's not necessarily a bad thing. See, I think Pranav, all of you also are keen observers of the venture ecosystems around the world, not just in India, and you know that it's a very cyclical business, right? I mean, typically, if you go back 20 years, around the century, we had the boom and the bust, which was the original. Then around the Lehman crisis, 2007, 2008, again we had it. 2015, if you remember, especially around Bombay and Powai, you had a lot of the food tech startups. I think at one count, almost 40 or 45 of them, right? Basically, this craze for delivering food, and many of them started around the sort of IIT Bombay campus. So you always had sort of those feeding frenzies, right? That's just the nature of capital following, a disproportionate sort of a fad, if you will, of ideas. But I think we're coming back to a more rationalized ecosystem. And I'll tell you why that's not a bad thing. One is that I think today you have to be really, really serious to start a company, right? To become an entrepreneur. That's one. So that's one role that we're seeing. The other role is actually much more active base of active mentors and advisors today, right? I mean, think about it, that if you have 100 unicorns, in one sense, every unicorn founder is also quote unquote a role model, a potential mentor, an angel investor that is available as a guide to, which was not the case earlier, right? So that's a new role. And then I would say that what we're also seeing is that in some cases, founders are coming to us, and we're also going to our founders and saying, if somebody was raising a 2 million round, and it is a really good team, but it's very, very early, we might actually partner with another VC and split the round, let's say, because the founder actually gets access to more capital. Both VCs are diversifying the risk. You don't need more than 2 million per se, and you can always climb up in your stake later, right? So we're seeing, I think, more partnerships and more syndicates in that sense. Just to give example of new roles. And I think that our own ecosystem, and we're also adjusting to the environment, right? Which is positive because our ecosystem is not at all static, right? It's a very dynamic situation. So I think these are some examples. Also, we're seeing different VCs carve out early stage programs, right? I mean, in one sense, you saw Sequoia doing that with Surge. We have our own, we have like a Blume Founders Fund where we'll back earlier stage companies, which are just founders we've known, have just started, may just have a plan on a paper, but are just building a product. And I think we're seeing that we're seeing carve outs, right? You're seeing larger platforms coming up with earlier stage programs.
And you have announced your fourth fund last year, right? Any update on the closure of that fund and the kind of LP interest and sentiment towards the Indian startup ecosystem?
Yeah, so we got on the road. We got on the road last year, and we will finally close. We will do the final close later this year, and you will certainly hear about that. So a couple of tailwinds. I think one I already talked about. That favorable shift. I think from China to India. We are also a part of the the recipients. I think another sea change has been, and I'm sure we'll talk more about this, is just the rise and availability of domestic capital, Pranav. I'm going back to about a decade ago, and we were the first VC, we were the first homegrown VC to raise entirely from India. The 100 crore fund we raised in 2010. This is Blume Fund 1, about exactly 100 crores, about 15 million US dollars. Every VC has always raised only from outside India, and some cases a mix of India and the US globally, but we were the first. Now that has come to stay. If you look at most of the homegrown VCs today, you can't ignore domestic capital, both from the domestic support, right from the sovereigns and the government agencies and the bodies that are supporting Indian startups and VCs, but also from domestic family offices, suddenly, and corporates. Well, suddenly, I'm going to use the word woken up and saying, we have all been running after all these glamorous startups in Silicon Valley, but here are our own homegrown girls and boys who are, look at the Nykaa story, for example. I want to bring that also in about women entrepreneurs, which was not even the case. You have great examples, right? Our own, we have Love Local, we have Kaleidofin, I know I'm missing some, and you've got the great Nykaa story. So a lot of that is also fueled interest, from domestic family offices. I think that's net positive for the Indian VC ecosystem and for startups.
Despite this gloomy global outlook, what are some of the sectors that you continue to be bullish about, and which ones do you expect, will continue to capture investor interest going forward?
Sure. Pranav, just to go back, I didn't answer fully your earlier question. So just coming back to Blume's fund, we're going to look at, north of 200 million for this fund, which will double the size from the last fund. The last fund was 2018, which was a $102 million fund. Sticking to the same strategy, which is pre-series A and A. But as you see, I think the ambition of Indian founders has become larger and stronger. While there is a market downturn overall, seed rounds have increased, right? So they VCs need more power capital for larger rounds, but also to follow them on later. We also have, we have 3 established offices today. I'm spending a little more time outside the US myself, but we also have a very active platform team in addition to the investment team that helps our companies with fundraising, go-to-market, hiring, outsourced CFO services. So we're expanding our capabilities, and so the good news is there's lots of capital for India. If you look at all our peers, and even some of the larger funds, while the global downturn is sitting on our shoulders, almost every firm has raised almost 2x of their earlier fund sizes. So that bodes well. Now, coming to this question about sectors of interest, see, I think any place where the buyer has shifted his or her mind and is very comfortable making that decision, using technology to make that decision, and also using this hybrid online offline model is what is exciting, right? So I'll just talk about some sectors. I'll start off just with Web3 and crypto. I think we are in a research and learning mode. I think we've got some great folks in our team who are doing some good work, but we have not jumped in, all in that space. So just to start off with that, I think in terms of what we think of, again, the Indian innovation in two buckets. We talked about that. I think around SaaS, vertical SaaS, for example, SaaS has almost become like a business model today. So applying that to different use cases, edge cases like healthcare, we've got Tricog, which is like a virtual cardiologist using AI predicting heart attacks. So I think AI and SaaS for different use cases like healthcare, for EdTech. Then you've got SaaS touching deep tech. For example, if you look at Pixel, which is our space tech company in one sense, but it's also a SaaS analytics company because that imagery can be used, that data can be useful for companies, or a gray orange robotics, which is automated warehousing. So I would say SaaS, vertical SaaS, deep tech, which touches, AI platforms and machine learning platforms. That's very, very broadly on the this side, which is built in India for the world. And then I'll tell you some interesting, surprising new sectors that we're seeing on the consumer side, like vernacular. Let's look at vernacular content, right? I mean, we've got Koo in one sense, which you could call like a local Twitter for India. Apramaya X Taxi for sure, who we had backed, is he and his co-founders and team are building Koo into a very interesting platform. But if you look at also Stage, right, which is sitting in outside Delhi, Vinay and the team there have actually built it around Haryanvi, the language. And I think that's the beauty of India, right? That we have all these sub languages and, in these states. What is interesting there, Pranav, is that there are paying subscribers for it. I think there are more than 50,000 subscribers at one count just in Haryana. So think about replicating and scaling that. So I think vernacular content is interesting. Sajid Pai from our team has written extensively about Bharat. We have the India, the IVAR, the Indus Valley annual report coming out, where we think that whether it is agri-tech or local content or, even delivery, right? Different forms of delivery, like a Dunzo, there could be different micro models for these cities will also take off. So different parts of e-commerce meets logistics, like a Dunzo is interesting. And then I think D2C enablers, are also interesting. We don't do brands ourselves, but I think the enabling infrastructure, whether it's fintech or if it's e-commerce, will take off. And finally, I think fintech is a very interesting area because so far a lot of the innovation has been around lending or very basic sort of fintech platforms. But now different parts of infrastructure, whether it is Web3, crypto, the guardrails, microfinance, lending to different pockets in India will take off. So we will see actually, we write quite extensively, and we have thesis reports around all these sectors, whether it's fintech, edtech, AI taking off. So overall, very bullish, on for this year, the remainder of this year, and also the next decade.
And how do you think early and growth stage startups can navigate these conditions? Like, what are some of the advice you're giving your portfolio startups, Sanjay?
Sure. So again, great question. I think the advice we have is that raise as much capital as you can, but also as you need. That's number one. But also stretch that as long as you can and manage that very carefully. And what I mean by that is this comes back to the core tenet of a startup or a business, which is really to achieve profitability, run a successful business, and get sustainable customers, right? So we're telling our founders that if you can raise capital when it's available, don't be obsessed about the right valuation. One caution, Pranav, I'll say, is that some startups have raised ahead of that time, and what that means is they've raised at a high valuation, and now they have to grow into that, right? The metrics that favored them about a year ago are no longer holding today. Just for example, if a SaaS company on forward multiples is getting about 20x revenues, a year ago, they're getting 10x now, which means that you're not going to get that bump up in valuation from a year. So you really literally have to grow the business. You have to focus on revenues. We're also telling them to pick your partners carefully, not to take just the best term sheet with the best valuation, because you don't want fair weather friends, right? You want partners that are going to stay with you for the long game of the journey and not sort of ditch you or not come into the next round, and that's negative signaling to you. And I think look at cost structures very carefully and extend that runway. I mean, these are in one sense good first principles anyway, Pranav, but I think they get highlighted when you have a downturn, and we've gone through that, in earlier downturns and cycles also.
And we're now seeing growing emphasis on corporate governance in startups and the need for new age companies to define a clear path to profitability, right? So, sorry. Give us a sense of some of the trends you're seeing unfold around these areas, and in your view on what this means for the startup ecosystem in the long run. Are there any other areas the startup need to be ramping up their focus on?
I think it's again a very interesting question. We see this change in behavior when we see some of the later stage public market funds come into our Series C and Series D rounds. And the board, if you're a fly on the wall observer in board meetings, you'll see that the founder is being asked questions about managing revenues from quarter to quarter. It's almost like you're getting ready to manage a public company, right? And that itself is not a bad thing, because essentially that's, that behavior has to come in now before you go public or before you get acquired, because it's not a switch that you can suddenly turn on, right? I've got to beat my quarter estimates now, right? That's healthy. The other part you talked about, corporate governance, I think is very important. Again, it's always important. It's come to the forefront now because of the situation the global market is in. So I think there are two lenses here, Pranav. I think one is, I think sometimes corporate governance is poor or sort of unfolds because there is really, something troubling happening, right? I mean, whatever, there is financial malfeasance or siphoning of funds or whatever. And I think you need strong financial controls where you have a strong CFO, you have an independent board member, and you also have the board, the VP of finance and legal just monitoring it. Sometimes you just have a case where companies are just going too fast. You have 2 or 3 young founders who their love is basically building products and selling them, not managing a company and managing finances. So I think it's also our collective responsibility as investors to not just be board members, but to bring in the equivalent of, just like how Larry and Sergey started Google, and they needed, I don't think it's so much of adult supervision, but just a hand, right? A helpful hand to help them manage that capital they've raised, to get a CFO, to get a more senior statesman who can actually sort of help on the operational aspects of the company while the founders, do what they love, which is build products and sell them. So yes, I think both those elements are important. As we get more and more companies going public, the good part is it also, Pranav, it tones you down, right? You have a high flying unicorn and suddenly you don't get the pop you see, and you realize that, wow, you know what, I have to be careful what I wish for. Did I really want to go public? I think there's also good behavior that comes from that. So one positive trend is with more interactions between the public market investors and us, we're seeing that behavior that can, come in earlier. And I think I will say that the government, this year, Karthik Reddy is the chairman of the IBCA, very closely involved. And I think that interaction with the government and government agencies is also positive for the ecosystem, because you want that to be joined at the hip, and you want to be doing that from day one, not just when you're close to these milestones like going public. So that's positive. I think all the Startup India, Invest India, and the Atmanirbhar and all the other initiatives that the government is taking with startups also helps with that lens of corporate governance and involvement.
And one last question for you, Sanjay, is we've seen domestic venture capitalists and private equity funds share of total startup investment rise consistently over the years. Talk to us about how significant this is for the new India economy story.
I think it's a great question to to segue into and culminate this session. It's actually a huge factor, Pranav. If going back to 10 years when when Blume started, you literally had to sort of fight tooth and nail and really try to convince people, because the interest was in public markets, right? I mean, in India, I think there's a very strong emphasis on liquidity, right? On something that you can touch and feel, and that you can buy and sell in the share bazaar, right? I mean, what is the stock worth? I remember when we started, people didn't really understand venture capital, and they would ask us, "Oh, so is this like a loan, and am I going to get paid like a dividend every month or dividend at the end of the year?" And we had to explain that you're not going to see your money for 10 years, 8 + 2 years at that time. And this was a very, very new concept. I think what is interesting is a couple of shifts. I think today, if you look at the brands, right, let's just think of all our relatives, our parents, grandparents, uncles, aunties. I think if you look at IPL, just think about it, that almost all the brands that are there have been venture funded, right? They become household names. So suddenly people say, okay, I recognize these names. Then I get a chance to be part of that. Secondly, they've become, not only have they become part of our households, but you also have friends and relatives who are working at these startups. So again, it's hit home, right? Because, I mean, this is appropriate to say, but earlier, whether you think of it as, as in the marriage market or wherever, it was not cool, right? I mean, you'd say, okay, startup means, are you really going to make money? And, what if this falls today? But today, it's something of pride. It's aspirational, right? To be even work for a startup, let alone be a startup founder. So I think all that is fueling well into the domestic family offices, and they're actually seeing that we actually need to support our own local startups. The government is also playing a big role. Also, they're becoming customers. I think this is also a differentiator for the homegrown VCs versus the legacy VCs. The reason startups also come to us is because if some of those are LPs and partners with us, startups can, they can become customers to our startups. They can open up the access. There's also learning. Some of the executives can come and talk. I'll tell you a very interesting experiment that one of our LPs tried a couple of years ago. Like a large consumer FMCG company said, the executives came to us and said, we're tired of looking at page 6 of the ET and seeing X executive leaves and joins Flipkart, M&A or head of product. Can we look at a strategy? Maybe what we do is we second these executives, right, to a startup for a couple of years, and if it works out, they can stay on. If it doesn't, they can come back. If you can't beat them, join them. And this cross-pollination again is helpful, because earlier you had corporates and family offices just sitting here, and then suddenly they would pick up the papers and read. And now they're saying that no, let's be part of the story. So I would say almost every homegrown VC fund is raising a good at least 25% from the domestic side, if not more. And it's something that can't be ignored, and it's positive. All of fund managers were running to Mauritius and running only overseas to raise capital. Now the fact that you have that at home is positive, net positive for VCs, for the ecosystem, and for startups.
That's all the questions I have for you, Sanjay. Thank you so much for finding time to speak with us today, and I'm sure there are a lot of learnings for people who are watching us from this conversation. And thank you for finding time.
I'd just like to add one final note. I will say one sea change, and this is not again a political statement, but I think what the government has done, putting India on the map. 5 years ago, we had to have 5 slides on why India. Geopolitical risk. Is it stable or unstable? Compare them to the other countries in Asia or India. Today, there is no why India slide. It is straight, Here's how you're going to create value. Here's why you need to be in India. Here's why you cannot afford to not be in India. You have that, and it's straight to the unicorns and what you've done. So that is a sea change where you don't have to sell India. I mean, people know India, they've seen the value, and it's more tell us what you can do and how we can partner. So that is really worth mentioning, and I think that is testament to all our founders and even all of you who have been covering the story, because I think you have great stories, but if you don't cover them, the world doesn't get to know. So it's a collective effort, and thank you as well.